The second statement that is covered in Chapter 3 is the income statement. And the income statement is organized by listing the amount of sales or revenue at the top, followed by all of the deductions that bring the income statement down to a net income. So underneath sales is the cost of goods sold, and these are all the costs directly associated with the sale of whatever product. So all of the expenses that we would associate with the sales of these snack foods. So this would include the inventory itself, the merchandise itself, as well as perhaps some direct labor. And followed by that, we would have some additional other expenses. These other expenses might be fixed expenses such as lease expenses or rental or managers. We then have the total operating cost excluding depreciation and amortization. So we're looking at the two numbers directly above added together. And then we subtract off depreciation and amortization. Keeping in mind from your previous studies that depreciation and amortization is not a cash expense. It is the amount the government lets us write off from some of our investments. So this didn't actually reduce the firm's wealth. It's just simply an acknowledgement that we have purchased some capital expenditures that we have now taken a portion of it away. So when we look from year to year, we see that the sales have not quite doubled. So it would be closer to 6.8 million if they had doubled. But our cost of goods sold have gone up just about twice, as have our other expenses. So our operating expenses are up a double. And because we had the big expansion, we do have some depreciation and amortization increase. And our earnings before interest and taxes, our EBIT, is now a negative number as compared to the previous year when we had 190,000 positive. We also already noted on our balance sheet that this expansion has all been supported by debt. Therefore, as we would expect, we have an increase in our interest expense that we owe on that debt. So it's further driving down the amount of net income. So subtracting the interest expense from our EBIT, we get our earnings before taxes, which is a negative 266,000 in 2012, almost 267,000, compared to 146,600 positive in 2011. Taxes are subtracted off from there. You see that this is a parentheses, a negative number. So because of this large loss, the company actually is getting a tax credit of 106,000, which makes their net income a negative 176 as opposed to the previous year when it had a positive net income of 87,960. Some additional data that would appear at the bottom of this income statement include that the number of shares are outstanding were 100,000 in both years. No new stocks were issued. The earnings per share has fallen from 88 cents per share to negative $1.60, and that's found simply by taking the 100,000 shares into these two numbers. So we see the negative $1.60, and we see the positive approximately 88 cents by taking 100,000 into the 87,960. The dividends per share is an amount that the Board of Trustees or Board of Directors determines that they will pay to each shareholder. So they cut the dividend in half in 2012, so 11 cents on the 100,000 shares means they paid out 11,000 in dividends compared to the previous year when they paid 22 cents. The stock price has fallen from $8.50 to $2.25, no doubt because of the core earnings of the company and the loss in their operations. They also have lease payments of $40,000. These are used later when we look at some of the ratio numbers. As we carry through then on the stockholders' equity, the statement at the end of 2012, we always start with where were we at the beginning of this year. And so we see the top line shows the balances at the very end of the last year. 100,000 shares out, 460,000 is the value of those. Retained earnings started out at 203,768. This number would have been on that balance sheet we looked at previously. And adding those two numbers together, we get the total shareholder equity of 663,768. We then either add in a net income, or in this case, subtract off a net loss, as well as subtracting off the amount that we paid in dividends. And so those two numbers together mean a negative $171,176 comes off of the shareholder equity, and the number also comes off of retained earnings. The stock amount stays the same, and we see the bottom line figures for the end of 2012. So this is the end of the second of the videos for Chapter 3.